Phil C here with you, professional trader here at Star Prosper. In this Star Trading overview, we're going to take a look at the euro dollar because there's a potential bat pattern for us pattern lovers to go take a look at together. So let's go through identifying what price action is doing, where it's most likely to go to, and if it does, there is a valid sell opportunity. So let's hit and flip to the charts, and remember, if you like my style of trading and you also want to learn to read the language of the markets so you can also benefit from potential trade opportunities, get started with the Star Classroom with the link below. I appreciate you for sharing your time with me always, and I'm grateful to share another day with you too. Let's go take a look at the euro dollar right now. Straight into the chart. All right, so this actually goes off from the workshop that we did not too long ago. What we're doing is this is the euro dollar on the daily time frame, and we have a starting point up here. Okay, so we've come down, we've had a pullback, we've had a new structure low, and we have a pullback. Where do we pull back into? Look left. Again, this is from the previous workshop that we did with price action and structure and trade setups. So we come all the way down and then we break and close below this low as well, right? What's on my radar for this week with the euro dollar is we've had a shift in trend. Okay, now as we've had a shift in trend, so we're bearish, then we've had a pull back here, and then we've come all the way down and we failed to retest in this low, right? We failed to retest to make this low, and then we also failed to make a new low. So we have a move towards the downside here, and then all of a sudden we get another move towards the upside here. I'll zoom in so it's easier to see. We have another move towards the upside. And we get a what? A higher high, higher close. So then we have another 4-point move in the opposite direction. This signals to us. Now remember from the workshop, this signals to us. Alarm bells should be going off right here. Okay. Price action is telling us something. Price action is signaling to us that it intends to go higher based off this market behavior right here. Okay. So then we have another move towards the downside. We retest this low looking left, don't we? After we get a move towards the downside, this is a valid trend continuation trade towards the upside. We have a valid buy towards the upside right here. Okay. Retest this high. And then potentially further on, as we can see from price action, what price action is doing right now. We get another move towards the upside. So we have an initial high, pullback, new structure high, and then a pullback again, and then we have a higher high, higher close right above that high, looking left there. Again, what is price action telling you right here? Well, what we expect to see is price action and pull back into where? Structure, right? Look left, structure here, here, here. And then we may get another move to retest this high or potentially higher. Now, what's on my radar for this week is a potential W formation. Now, I say potential from here because price action can absolutely do one of these numbers. So that can happen as well. But based off what is going on here, okay, I would like to see from the market, just zoom out here, I would like to see something like this. Okay, price action moving all the way up to retest this high right here, to retest this structure level. Now, if we get a move to 109s, if we get a move all the way to the upside here, I want to look for potential selling opportunity, right around this level. And what I can see in front of me here after doing the analysis reading the language of the markets, is I want to take my recent high at this structure level. Okay. I want to take this recent high and this recent low. I want to grab a Fibonacci retracement tool and I want to measure the B point right here. Okay, so I'm looking for a W formation at this point. So I take this high and this low and I grab the Fibonacci retracement tool and just do that. Swing high to swing low. What I'm looking for is a B point right here that hits the minimum of a 382. And we get that. So that puts me on bat pattern alert. So again, that is what I'm looking for, right? And of course, we do a Fibonacci retracement from this low to this high, right there. And we also look for a C point at a minimum of a 382, which price action comes down and hits right there. Third condition, what are we looking for? So we have price action move all the way down here. A CD completion, right? Condition 3, we're looking for price action to move all the way back up into this level right here, because this is my potential sell. This is where I'm looking at for selling opportunities. This is the W formation right there. So for the last one, I want to grab the Fibonacci retracement again and take it from this high to this low once again. So swing high all the way down to swing low. And what I'm looking for is right there. What I'm looking for is the 886 Fibonacci retracement. Okay. Now, if price action moves all the way up, because remember, price action can just fall off a cliff from here. Everything that we are doing is based on probabilities. That's why we use an if-then syntax. What does that mean? All the syntax means in order which events occur, right? That way we can have consistent actions in the markets, which gives us consistent pips in the markets. So if price action can give us a CD completion all the way up into an 886 right there, then we are looking for sell opportunities. Once price action reaches this level, I'm looking to sell at market, okay? And it will look something like this. So we have our X to A right here, A to B, B to C, and C to D right there. So the sell zone that I'm looking at, so let's grab my rectangle tool. The sell zone that I'm looking at is from the 886 all the way up to this swing high right there, okay? So this would be my sell zone. If price action moves all the way up into the sell zone, then we are going to sell, okay? Right at the 886. So where are we selling into? Fibonacci retracement, and we are going to take it from this low all the way up to our D point. Okay, so from A to D, swing low, all the way up into swing high. So what I'm looking for is 2 targets, because everything that I trade is 2 targets. So if we're going to move up here, we're looking for a 382 for target 1, and then potentially a move all the way down into a 618 for target 2. Okay, so entry will be right here. Target 1 will be at the 382, and target 2 will be at the 618. And of course, the most important thing that we want to do is, where do we get out if we are wrong? Again, we're trading based on probabilities. The probability that we come up into an 886 and hit targets is over 50%. I'm over half right on this particular setup. Now, if I'm over half right and I have a really good risk to reward, which means a positive risk to reward, then I'm going to do incredibly well. And that's one of the secrets to trading, right? On this setup, we're half right with a positive risk to reward. We know our average, so we want to come into the markets and trade this every single time that it sets up, okay? Because this is what generates us consistent pips. The likelihood that we come up and hit the 886 and then into targets is over half right. That gives us a mathematical proven probability that we are going to gain more than we lose, right? So that's our entry. Target 1, 382, target 2, 618. So where is our stop going to go? Above this high, looking left, above our X point, okay? So if we grab the dealer thingy, and let's just put it in. So we get our stops above the swing high here, okay? This is our entry right there. Let's make that a bit smaller. And all we want is our stops above that X point right there, okay? So stops are above the X point right there. And then target 1 is at a 382, okay? Right there. What we want to do is clone this and move it to the side. Target 1 and target 2 is, we'll drag that down into a, drag that down into a 618 right there, okay? And again, what was my strike rate on this setup? It's over 50%, right? We're half right on this setup. So if we have a positive risk to reward, so what's my risk to reward here? Well, we're risking $1 for $1.40, $1.40 right there. So we're over a 1-to-1 risk to reward on target 1 and over a 2-to-1 on target 2. Again, we have a potential bat pattern opportunity. So if price action comes up and hits our 886, we have a valid bat and we want to execute a sell order into 2 targets. Why? 50% accurate. Positive risk to reward profile. So every single time I see the setup, I want to sell and do that over and over and over. The consistent actions are going to give me consistent results. And those results are positive results. And what are positive results for those who have been following me for a while? Those positive results are profitable results, okay? So this is the setup that I'm looking for right here. Okay? We're going to move up into our sell zone. We're looking for entries, stops above the swing high, and targets at a 382 and a 618 from the Fibonacci from this low to this high. Okay, right there. So that is what's on my radar for this star trading overview. It was the euro dollar on a daily time frame with a potential bat pattern opportunity. So if we get a move towards the upside, then we are going to look for a sell. And that's it for this video. Again, if you like my style of trading and you want to learn to read the language of the markets like we just demonstrated right here, I'll leave a link in the description below. Join this Start Classroom. It's forever free. And start going through the material at your own pace and start to read price action like a book. And I'm sure that it will turn your trading around with an entirely new perspective on price action. So please have fun with that. Please enjoy. Until next time, be safe, enjoy life, and I'll talk to you soon.